Okay, good afternoon, and thank you for joining the HKGFA training series, Managing the Transition, Advancing Carbon Accounting with PCAF. A very warm welcome back to the PCAF team, and thank you to our co-chairs of the Green and Sustainable Banking Working Group, Danny Wong from BOC and Jonathan Zhu from HSBC. My name is Jenny Lee. I'm the Undersecretary General for the Hong Kong Green Finance Association. So before we begin, a few words on housekeeping. This webinar is recorded and broadcasted live on YouTube, so you'll be able to watch the replay. During the webinar, you'll be able to post your questions in the Q&A session. We have allocated 15 minutes after the presentation for a moderated panel discussion and encourage you to ask questions then. This webinar is also eligible for CPT points, so please complete the survey at the end of the event to claim your attendance record. So in the next 60 minutes, Danny Wong will provide the opening remarks, followed by the PCAF presentation, an overview of the second edition of the PCAF Standards and new methodologies, and how to measure finance emissions and key steps. You'll have the opportunity to ask the panel speakers questions, and this will be moderated by Jonathan Zhu. So without much further ado, I'll pass the floor to Danny, the co-chair of the Banking Working Group, to kick us off. The floor is yours, Danny.
Thank you, Jenny. Hi, everyone. Good afternoon. Welcome to the Hong Kong GFA training series. Today's topic is Managing the Transition, Advancing Carbon Accounting with PCAF. In our journey to net zero, measuring financial emission is the starting point to manage risk and identify opportunities associated with greenhouse gas emission. Since the PCAF was launched globally in September 2019, more than 170 banks and investors have subscribed to the PCAF initiative, working together to jointly develop the global GHG accounting and reporting standard for the financial industry to measure and disclose the greenhouse emission for their loans and investment. In the past PCAF trainings we received very positive feedback from our members. Today, we are very honored to invite the PCAF team again to share their methodology and application with us. I believe we are all very excited to learn more about the newest updates on the PCAF methodology and the recent market best practice. Today's training consists of two sections. The first session is a presentation from the PCAF representatives, followed by a Q&A section for additional questions from the floor. In the first session, we are very honored to have Dylan Hauser and Tanga Wei from the PCAF Secretary to share with us on the value of measuring financial emission and GHG accounting implementation. Dylan is a commercial sustainability consultant at Guidehouse, where he supports and advises financial institutions on decarbonization process and climate strategy, guiding them on their entire net zero journey. Dylan leads all regional PCAF activities in PCAF Africa and Middle East. He's a coordinator for PCAF Netherlands and is part of the PCAF technical assistant team. Tanga Wei is a senior consultant at Guidehouse, where she advises financial institutions and large corporates on decarbonization and climate-related strategy. Tanga leads all regional PCAF activities in APAC and is a member of technical assistant team. Finally, in the Q&A section, we have Jonathan Zhu, Hong Kong GFA Executive Committee and Head of Global Banking Sustainability of HSBC, who will act as our moderator of the today. Okay. I think without further ado, let's begin with the PCAF presentation. Tanga and Dylan, the floor is yours.
Thank you very much, Danny, and also thank you, Jenny, for the warm introduction. Hi everyone, good afternoon. I'm Tanga Wei. It's a pleasure to be back here and present to you Partnership for Carbon Accounting Financials, PCAF, enabling financial institutions to assess and disclose finance emissions. And we want to make this session as interactive as possible. So there are two ways that you can engage during the session. Please feel free to use the Q&A function to submit your questions, and we're happy to address them in the Q&A section at the end. But also, please also feel free to use the chat functions. Very excited to tell you more about PCAF and go through what we are hoping to cover over the next 40 minutes. So next slide, please. We prepared some content, and it will be structured into 4 parts. We'll start with a high-level introduction to PCAF, sharing with you some of the exciting knowledge products and give you updates on PCAF as an initiative. Then we'll briefly have an overview on the value of measuring finance emissions, how measuring finance emissions can help you to prepare and align with and reaching net zero by 2050, aligning with the Paris climate goal. We'll also spend majority of the time walking you over the greenhouse gas accounting implementation section, where my colleague Dylan Hauser will present to you a few practical examples and get you to do some maths with us. And we'll evaluate different data options and how that will be reflected when you're actually doing the calculations. Last but not least, just a few words on participation in PCAF and tell you more about how to join the PCAF family and become part of our network. Next slide, please. So introduction to PCAF. Thank you. So PCAF is a global industry-led initiative. It is a global partnership of financial institutions that work together to develop and implement a harmonized approach in order to assess and disclose greenhouse gas emissions associated with their loans and investment. It is an industry-led initiative, which means it's led by the financial industry for the financial industry, and is currently funded by philanthropies. So PCAF started off small. There was a group of like-minded Dutch financial institutions, and we started off in 2015 in the Netherlands. In 2018, PCAF expanded into North America, and a group of financial institutions decided to globalize this initiative in 2019. We're governed by a global steering committee who essentially sets the overall direction and strategy of the initiative. So since we launched globally in September 2019, we have come a long way, and we'll share with you our current status on the next slide. Currently, more than 340 financial institutions in 63 countries are part of PCAF, and that is representing 85+ trillions of US dollars in total assets. So out of these 340 financial institutions, around 100 financial institutions have published at least one PCAF disclosure. There are many financial institutions who have published multiple disclosures. And in case you're interested to find out more about that, please feel free to visit the PCAF website, and under the financial institutions taking action page, you'll be able to see the disclosures published by the PCAF signatories. We boast diversity through the variety in the type of financial institutions. So our network includes commercial banks, asset managers, insurance companies, and financial services groups. Our objectives are twofold. One, as you can see on the slide, is to develop this harmonized and standardized methodology, which is the global greenhouse gas accounting reporting standard for the financial industry, the PCAF Standard. And secondly, is to have this network, and we originally set the objective to increase the number of financial institutions part of the network to 250 by the end of this year. And as we are already in year end 2022, you can see that we surpassed this target by almost 100 financial institutions. So we're very grateful for the support from the financial industry, and we'll continue to support the financial institutions in our network on their carbon accounting journey. Next slide, please. So I also want to zoom into APAC, Asia Pacific region, and tell you more about PCAF APAC. We have seen very strong momentum in the PCAF Asia Pacific region. In fact, over 20% of the financial institutions in PCAF are from Asia Pacific, and that is representing more than 23 trillions of US dollars in total financial assets. Within the Asia Pacific region, we have established 2 national chapters, essentially a coalition of financial institutions from Japan and Korea, who speak the same language and face the similar regulatory challenges, and they have decided to establish 2 regional groups to continue the discussion at national level. APAC accounted for over 25% of all new PCAF signatories in the last 6 months, and we are delighted to see this momentum, and we look forward to continue to having this conversation with interested financial institutions. Next slide, please. So one of the objectives I mentioned on the previous slide was to develop a standard, so a harmonized approach to greenhouse gas accounting for the financial industry. I just want to tell you more about the history of the first edition of the PCAF Standard, and then we'll go over the current status of the standard and the second edition of the standard. So since 2015, PCAF participants have developed and tested various greenhouse gas accounting methods, and that led to a globally harmonized standard, which was launched in 2020. So the PCAF standard, it can be seen as an extension to the Greenhouse Gas Protocol Scope 3 accounting and reporting standard. This is because the standard, the PCAF standard, has been reviewed by the Greenhouse Gas Protocol and is in conformance with the requirements set forth in the Scope 3 standard for Category 15 investment activities. So we do have the built on Greenhouse Gas Protocol mark, which means all requirements and recommendations are aligned with Greenhouse Gas Protocol. So we have been working very hard since we launched the first edition of the standard. So the first edition of the standard currently captures 6 different asset classes. You can see the 6, they are represented by the 6 icons on this slide. And you'll also find below each icon, there's an equation. My colleague Dylan will tell you more about the overarching greenhouse gas accounting concepts and how the equation will work in practical terms. But essentially, when it comes to greenhouse gas accounting, what we are trying to calculate, or as a financial institution, is to attribute the amount of emissions from a financial institution's investee or borrowers. And that's hence you can see the equations below these icons are made up by 2 parts. The numerators and denominator may look different depending on which equation we are looking at. And this is because we have taken into account of the different natures of the asset classes. So please feel free to refer to chapter 5 of the first edition of PCAF Standard and find out more about these equations. Next slide, please. Thank you. So what have been working on since we launched the first edition of the standard? I also want to introduce you to some new terminologies on this slide. In terms of finance emissions, so this is a continuation of the 6 asset classes we have seen on the previous slide. We are updating the standard to include 2 new additional asset classes, and these are sovereign bonds, sovereign debt, and emissions removals. Besides, we established 2 working groups to look into the terminologies facilitated emissions and insurance-associated emissions. Facilitated emissions, in a nutshell, is to look at emissions. These are not on the balance sheet like the finance emissions, but more trying to find out a way to account of emissions for capital market facilitations or capital markets instruments. For insurance-associated emissions, as insurance companies can already start to use the first edition of the PCAF standard for the asset management business. So really, the purpose of this working group, which we established in collaboration with Net Zero Insurance Alliance, NZIA, is to focus on insurance underwriting. And we do have a slide to tell you more about that in this section. We also recognize the importance of implementation and sharing best practices when it comes to greenhouse gas accounting. So PCAF is working with financial institutions to bring the 6 official PCAF case studies, where we'll go into the details and share with everyone how they can get started on their greenhouse gas accounting journey, focusing on different asset classes. Next slide, please. So the standard, coming this December, we are very excited to launch the new PCAF standard, and you can already register for the virtual launch event. We have included a hyperlink on this slide, and that will be hosted on the 20th of December this month. So what will form the new PCAF standard? So the second edition of the standard will be in 3 parts. First of all, part A, it will include new asset classes, like I alluded on the previous slide, sovereign bonds, sovereign debts, emission removals. And that is expected to be launched before this virtual launch event, so in this December. Part B will include facilitated emissions. So the draft methodologies for facilitated emissions is already available on the website. But we will be adding the finalized version of this methodology coming in early 2023. Part C, which will be focusing on insurance-associated emissions. We already launched that in November 2022. My colleague actually traveled to Zurich to conduct this launch. So that is already available, and it will be part C of the new PCAF standard. So look forward to seeing you at the virtual launch event, where we'll also invite working group chairs to tell everyone more about the new methodologies, so sovereign debt and emission removals. Next slide, please. So I just want to zoom in to insurance-associated emissions and facilitated emissions and tell you more about that. The insurance-associated emissions is currently presented in a separate document, standard, and part C, and it is based on robust and consistent accounting rules. So it may, these 6 shapes that you see on this slide may look familiar because it follows a similar structure or layout as how we set out the finance emissions standard, where we'll begin with introduction and background, then we'll zoom into how to apply the accounting methodologies and reporting recommendations. What is this insurance-associated emissions focusing on? It is insurance underwriting, but at the moment, we only look at commercial lines and personal motor lines. So we don't go into life insurance or anything beyond that. In terms of the formula to calculate insurance-associated emissions, it will follow a similar concept in terms of how we done it for finance emissions, which means it will be made up by 2 parts, the attribution factor and the emissions. But the denominators and the format will look slightly different depending on the data quality available. So if you want to read more about that, please feel free to download this accounting and reporting standard for the insurance-associated emissions with the hyperlink on this slide. So next, let's have a look at facilitated emissions. We want to try to summarize in terms of the difference between finance emissions and facilitated emissions on this diagram. So when we talk about on-balance sheets, we are talking about the finance emissions. So they are asset classes where these are on-balance sheets, and for financial institutions, they can use the first edition and the upcoming second edition standard part A to essentially account for the emissions from different asset classes. So as you can see, sovereign bonds or sovereign debt will be a standalone chapter, and emission removals will be integrated, and you can find that, for example, under the project finance asset classes. So it will be integrated into existing asset classes. So these methodologies are available, and that is the primary and direct link with the current PCAF standard. But we also recognize the needs and the importance of the capital markets, and we also see an increasing number of signatories with financial institutions such as investment bank with a large amount of capital market business. So we are leveraging to develop the accounting methodology for these off-balance sheet instruments, or maybe they are only temporarily on the balance sheet for a short amount of time. So facilitated emissions trying to answer the question in terms of if I'm have a capital market business, I trade a swap or a derivative, how do I account for that? Or alternatively, if I played more of an advisory role or advisor role to facilitate a transaction or a deal, how do I account for my emissions? I did not invest or sort of lend a chunk of money, and it's hard to tell that from the balance sheet. So facilitated emissions is trying to answer all of these questions. And in the scoping paper, as well as the draft methodologies, we evaluate what we call this flow versus stock approach. And we also touch up on and clarify the different terminologies such as facilitator, arranger, etc. So that is also available at the moment, but the final methodology won't be launched until early 2023. Next slide, please. We now would like to move on to the value of measuring finance emissions. So going back to why is it important to consider greenhouse gas accounting and do greenhouse gas accounting for your portfolio, and how that help you to get to net zero as a financial institution. So greenhouse gas accounting for financial institutions, just like financial accounting, it follows the same robustness and rigor. Essentially, the greenhouse gas accounting for financial institution is the annual accounting and disclosure of greenhouse gas emissions associated with long-term investment. It is at a fixed point in time, so it's usually in line with the financial accounting periods. I also want to leave you with one of my favorite statements. If you can help me click, thank you. Which is what gets measured gets managed. Only if you get measured, you'll have an understanding of where you're at in terms of the greenhouse gas emissions on your portfolio. Then, with that in mind, as a financial institution, you can manage and take actions. So I'll tell you more about that in my next 2 slides. So before we dive into it, this diagram, which many of you may already be very familiar with, we just want to emphasize that PCAF solely focuses on Scope 3, Category 15, which is the investment category. And the key principle is that financial institutions indirectly create a climate impact through their long-term investments. I think for the financial institution, a report conducted by CDP said that the investment activities or Scope 3 Category 15 can be 700 times larger than direct emissions. So these are from your company facilities or company vehicles. So it is a significant amount, and this is why it's very important for financial institutions to look into the financed emissions or emissions from the portfolio. Next slide, please. So how does PCAF will help on this journey to net zero? So on this slide, I'd like to introduce you to this framework that we refer to as the strategic Paris alignment framework. So essentially, you can see that to get to net zero is not just about measuring and disclosing financed emission. It is just the first building block, and it's also part of this journey. Usually the step is, as a financial institution, once they measure their emissions or conduct greenhouse gas accounting, they will have a good understanding and establish essentially a baseline. This baseline will help them to consider setting targets using science-based methodologies. And for instance, the PCAF methodologies is completely aligned with SBTI's methodologies and guidance for financial institutions, specifically on the SDA approach, sectoral decarbonization approach. So once the target is set, this annual exercise of measuring the finance emissions or conducting greenhouse gas accounting will help the financial institutions to develop relevant climate strategy to help them to get to that targets they set. This also means, taking actions. It is not just about setting the strategy, but it's also about implementation and carry out the climate actions. This is an iterative process. It will require continuous monitoring of progress and steering and a robust governance structure from a senior leadership team. So it's not just about a team of technical experts who conduct and measure the emissions, but it's also about this exercise of steering and progress monitoring going forward. So in case you're interested to read out more about each step, I have also included a link to this strategic framework for Paris alignment, which I have the pleasure to co-author. I'd like now to move on to the next slide, which is a new section. And I would like now to hand over to my colleague Dylan Hauser, who's also a technical expert at the PCAF Secretariat, to dive right into greenhouse gas accounting implementation and how to put some of the asset classes and methodologies I mentioned earlier into context. So Dylan, the floor is yours.
Thank you very much, Tiang, and thank you very much for the introduction there as well. So what we would like to do now for the upcoming minutes is to indeed take a look at the first step that Tiang just described, so the measuring and disclosing. And that's a process that, even though we've taken a look at 5 different steps from the strategic framework for Paris alignment, that's a process that you can generally break down into 4 larger steps. We're going to approach this from a bottom-up approach. So we're starting with this general approach, with the approach that we recommend you to follow as well. But what we are going to do, though, in these slides after, is we're specifically going to take a look at point 3, applying the methods, because we're actually going to take a look at how would that look like in real life. And as Tiang said from the start, take a look at some actual calculation examples there. We're also going to take a look at a disclosure example briefly, just to give you an impression of how it's going to look like. But to start off with step number one, scoping is the first important thing that you will need to start with. Once you actually, for instance, as a financial institution, decide to sign the commitment letter, you do commit to at least disclosing a certain percentage, a certain sector, a certain subsector, a certain asset class, or your portfolio within a specific country, according to the PCAF standard. That is going to be very important for you as well. As a financial institution, it is up to you to define the scope of the assessment. So it's up to you to decide what you're going to do. Are there any vital sectors that you want to focus on? It can be done through a hotspot analysis, for instance, as well, where you determine what are our most vital sectors, what are our most vital asset classes to focus on first, and then continue to expand upon the knowledge that you're having, and then slowly expand to cover your portfolio overall. That's something you do before moving on to step number two, which would be to identify the data needs. Because each different sector, each different asset class, each different country might need or require a different set of data in order to perform the actual calculation. We've already seen it on one of the previous slides presented by Tiang when we were taking a look at the different equations that were involved per asset class. Even though the general equation, which we're going to talk about in a minute, is relatively similar overall in the asset classes, there are some nuances that require different data aspects. And in addition, it might also be that there are different data availabilities per country or per sector that might actually help you in doing this calculation. So it's very important to identify that beforehand so that you have a clear overview of what you have and what the input of the calculations are exactly going to be. That's something you before moving on to step number three, which is to apply the actual methods. And that is what the PCAF standard then mostly is about, right? The actual way on how to calculate it per different asset class and per different data quality option, which we're going to take a look at in a minute as well. Because it's not only one equation that you can follow per asset class or one equation that you can follow per sector. There are multiple approaches that you can take that correlate with the accuracy of the calculation and the output of the equation. That is something you do before moving on to the last step, and that is the report and disclosure. And the reporting and disclosure is something the PCAF standard touch upon as well in chapter 6. That is, we're going to take a look at that in a minute as well. What the majority of this is going to be about is to actually take a look at the general approach to calculate the financed emissions, something that you see at the bottom of this slide. We're going to break that down because what you see is that the financed emissions equals the investment over the investee equity plus investee debt or loan, or the emissions of the loanee there as well. And the first part of that equation after financed emissions equals is something that we call the attribution factor. And that's what you can see here on this slide. And the attribution factor is one of the most important elements of the PCAF standard, as it determines what you as a financial institution are responsible for. Because the PCAF standard describes that, all right, if you have a certain amount loaned to company X, if you invested a certain amount in company B, that means that you're only responsible for the amount of investment or the amount loaned to that individual company or that individual. Meaning that this can be applied to all the different asset classes. The attribution is something that you will see in each and every asset class. Sometimes nominated slightly differently, but it always applies. As a matter of fact, it does not only apply to financed emission, but it would also apply to, for instance, insurance-associated emissions that were just covered by Tiange, but in a slightly different way, of course, depending on the nature of the asset class that we're taking a look at. So the other side of the equation, that is the emissions. And even though the attribution factor is relatively simple, as it just dictates the relative percentage and the relative responsibility of you as a financial institution when it comes to the emissions generated, the emissions actually differ significantly in how you can calculate that. What we're going to take a look at now, and that's the logo that you see on the right top side. That is the business loan logo that we use in the PCAF Standard. The business loan often is one of the most important asset classes as well for a financial institution. And that's the one that we're going to take a look at to focus on the practical examples. And as I said, these things are largely similar throughout the asset classes, but just so that you're aware that we're specifically going to take a look at business loans. So there are three larger buckets, three larger options to consider when applying a calculation for the emissions. And these are in hierarchy of preference, meaning that option 3 is less desirable than option 1, meaning that option 3, generally speaking, is less accurate in terms of the actual emissions number that it represents, because obviously economic activity-based emissions is less accurate than the actual reported emissions that you can get from a company. And then physical emissions, physical activity-based emissions is in the middle of that. And it's good to understand how that works. So we're going to take a look at this specific example that is covered as a screen, that are both covered as a screenshot from the PCAF Standard as well. Because all these three different options that we've just taken a look at, which you can see in the right-hand side of this slide, option 1, reported emissions, option 2, physical activity-based emissions, and option 3, economic activity-based emissions, can also be classified in different scores. Score 1 to 5, and this applies. And the same logic applies. Score 1 is better in terms of data accuracy than score number 5. And all these different scores have a slight nuance in terms of the calculation. For instance, if you're going to take a look at option 1, you see that what you would need is the outstanding amount in the company and or EVIC. And what you would also need are the actual verified emissions, so verified in accordance to the greenhouse gas protocol, somewhat meaning audited greenhouse gas emissions. If we're going to take a look, and that would be the most preferable option. And if we are then going to take a look at physical-based emissions instead, for instance, option 2A, for instance, what you would need is that you need the company's energy consumption, or you need other primary data. Generally speaking, when it comes to physical activity-based emissions, you do not need reported emissions as you would need for option 1, but you need physical output of that specific company as the most important factor. We're going to take a look at some examples later, but for instance, if you have a loan or investment to an agricultural company, you would need to know the yearly output of that agriculture company. For instance, the ton of corn it produced. Or if you are going to take a look at a cement company, you would need the ton of cement that is produced in that year by that specific company. Option 3 is generally, and that's one of the reasons why we wanted to include as well, especially for instance, option 3B is generally speaking always possible. And let's take a look at that one, because option 3 would require you as a financial institution to know the outstanding amount and the specific sector that this company is operating in, which would allow you, for instance, through the PCAF database, to get an actual emission factor, an economic activity-based emission factor, to make an estimation of what the emissions exactly are. And as you already noticed, we're taking a look at the outstanding amount only. So we're not attributing this. That's actually the only option that we're not attributing. And we're going to take a look at sectoral emission factors, which hides nuance between companies. So we're already taking a step back from the most accurate option that you can consider, which is less desirable, but generally speaking, always possible. So you often see that a lot of financial institutions globally throughout the world, regardless of the country that they're operating in, actually start with these lowest scores. In terms of that, better quality is not always available. And it's not a problem either, because what this would show, if you would plot it in an actual bubble chart, as you can see here, is that you, at some point, if you've done some calculations for multiple asset classes, multiple sectors, multiple countries, you can plot them in a bubble chart like this. It's not something that the PCAF standard says that you should do. It's something that you can do yourself to get a better understanding, because you can, for instance, see differences. It allows you to see differences pretty clearly, right? We have this in a higher data quality score. We have that in a lower data quality score. And what it does then is that it allows you to see a very clear pathway on how to improve the data quality over time to increase the accuracy of your calculations. If you know that one specific asset class has a data quality score of 5, looking at the image on this slide, you know that if we want to achieve a high data quality score, you can distill the required data that is necessary there in order to actually calculate a higher data quality score to get to a higher accuracy level of your emissions calculations. So we're going to take a look very briefly at data. There are a few options to consider when it comes to actually retrieving data, because we know that if you talk to a lot of financial institutions and if you ask them, right, what are some difficulties you're currently experiencing, what you often receive as a response is data availability. And data availability is difficult. It differs per option and different data quality score that you can apply as well. For instance, third-party data providers like CDP, Bloomberg, MSCI, Sustainalytics do often have reported emissions that you as a financial institution can use. For instance, when you take a look at physical activity data, there are physical emission factors that you can use as well. For instance, DEFRA, IPCC have physical emission factors that you can use as a financial institution for a specific sector that you're taking a look at. There are also economic activity emission factor databases, just like the PCAF database. And the PCAF database uses XIO-based, for instance, for that as well. If you are located in a specific country, it might also be that there aren't emission factors available for the specific country that you're taking a look at. For instance, it doesn't have to be the exact example that I provided here on the left-hand side, that if you're going to take a look at a business loan for a specific sector in Malaysia, you cannot find an emission factor for it, but you do have one in Singapore that is very useful. It might add added granularity and increased accuracy to your calculations overall. It might be worthwhile considering to take those emission factors for Singapore instead. So you would need to qualitatively explain that though. Also add some data in there if you can. For instance, is there a similarity in climate? Is there a similar grid composition? There are certain things that you would need to take into account to either actually explain why you're using proxy emission factors instead. So always make sure that you disclose that transparently. Not that long ago, I saw an example myself where a very large, high-emitting business loan close to the border in the US, it was located in Mexico itself, was taking emission factors from the US as there is a significantly higher granularity, significantly higher data availability in the US. So they took very specific emission factors from the US just to get a better understanding of what that business loan close to the US border actually would do. Mentioned it now a few times already. PCAF has its own database. It includes 3 million emission factors, overall largely economic activity-based emission factors, to allow you as a financial institution to focus on this and to actually get a calculation in. And that's something that you have free access to as a PCAF signatory. It's fully transparent. It allows you to take a look at the sources and where we got it from as well. If you scroll completely to the right, if you open it, and we have each asset class available as defined by the PCAF standard and as many geographies and sectors as possible. If you cannot find the emission factor for your own country, it might be that we have a regional emission factor, for instance, then as well, or otherwise, as I said just now, you can take a look at a proxy country instead. Lastly, before we take a look at some practical examples, the standard also provides recommendations on what to display in reporting. If you take a look at chapter 6, which I have already mentioned just now. So for the upcoming few minutes, to take a look at some actual practical examples. We're going to take a look at 3 options. We're going to take a look at one for reported emissions. That was the highest one. As I said, we're going to take a look at a physical option, and we're going to take a look at an economic activity option. So what you see here is that we have a dairy farm in Thailand. And as you can see on the right top side, we're talking about a business loan. We included the logo there already, so we're going to apply the same logic as we've seen just now. So we have an outstanding amount per end of year, because we're talking about aligning with the balance sheet and aligning with other financial statements, as Tianga already mentioned at the start, of USD 0.8 million. We have a total debt plus equity, which we've received, of 1.2 million, right? So there we already see that we might have an attribution factor there. And we have emissions reported by the farm of 3,500 tons of CO2 equivalents. So equivalence is very important here because we're talking about a dairy farm. So things like methane and nitrogen can become very important there too. So in this case, we do not actually need an emission factor. Please let me remind you of the basic equation that we have there. It's outstanding amount divided by total equity plus debt times the directly reported emissions. This is going to be a very favorable situation. Most likely, relatively and on average, dairy farms throughout the world do not report on their actual verified emissions yet. But this is a situation where we're hoping to get within a few years of time, of course. So calculating that, we have the attribution factor at the start and the emissions towards the end. So turning that into a calculation allows us to divide 0.8 by 1.2 million, which is the attribution factor. We have the outstanding amount divided by the total equity plus debt times the actual reported emissions, because as a financial institution, you're only responsible for that specific percentage. And that specific percentage is 66.66% times the emissions, provides you with the actual total emissions you're responsible for as a financial institution. Physical activity data. We're going to take a look at a crop production in Japan, and we have this time we have an outstanding amount of 0.9 million US dollars. We have total equity plus debt. This company is slightly larger, of 2.1 million US dollars. We have an annual production of the company of 1,000 tons of cereal. And we have an emission factor, which we received this time from the PCAF database. But we've already taken a look at another slide, which included more data vendors. And we do not specifically prefer one data vendor over the other, but it was just an example of, there were just a few examples in that slide. So please let me remind you of how you can translate the basic equation that we've taken a look at now into something that would apply here. We still have the attribution factor and we still have the emissions, but this time you actually get the emissions by using the production, the physical output, which I've tried to explain before, times the emission factor, which we this time got from the PCAF database. Putting that into the equation ourselves, we start with the attribution factor, 0.9 divided by 2.1. 0.9 was the outstanding amount, divided by the 2.1 million, it's the total equity plus debt, times the emissions of the cereal produced, the physical output we have generally reported by the crop production itself, times the emission factor that we have received from the PCAF database, translated into 42.86% times the emissions, provides us with the final number. Now we're going to take a look at the economic activity data option. And generally speaking, this is the option that you see most often still. So let's definitely go and take a look at that. We're taking a look now specifically at an electricity producer in Malaysia, still business loans. We have an outstanding amount of 16 million USD. We have a total equity plus debt of 40 million US dollars. We have an annual revenue of the company of 23 million. And we have an emission factor also that we got through the PCAF database of 19.3 tons CO2 over million US dollars. So this time around, we are not taking a look at the physical output, but we're taking a look at the revenue. This is specifically option 3A. So what we're doing now, we take the attribution, which is the same again. But this time, the emission calculation is done by the revenue times the emission factor, because we are basing it on sectoral average within that specific country. So the financed emission results in 16 million over 40 million, the attribution calculation that we've done more often, times the emissions, which is 23 million times 19.3 in terms of the economic emission factor that we've already received. It's 40% times the total number of tons CO2, provides us with the total financed emissions based on the economic activity data. As I said, this is the least accurate of the three, but still most common. And there are slight nuances between the different options, and we've just taken three as an example, which you, as a financial institution or aiding a financial institution, can translate into an example, into a disclosure, which you can see here. We have Evan Load included here, and we've already mentioned Chapter 6, which provides you with a lot of different recommendations. In addition, we would like to mention that the appendix of the PCAF Standard also includes an example of how you can disclose it yourself. But we want to make sure that it's clear to you that besides all the things that we recommend you to do and ask you to do as PCAF, there are also a lot of things that you can decide to do yourself, things that you as a financial institution find important to show, which you can include there as well. The PCAF website includes a very long list of each financial institution who committed to PCAF, who actually disclose. We're tracking that on our own website, so please go and take a look at the list of financial institutions so that you can get some inspiration from, if you'd like. And that concludes my section. I like to pass it back to you, Tiange, to spend a minute on the participation in PCAF.
Thank you very much, Dylan. So on to participation in PCAF. After hearing about the upcoming methodologies and also initiatives, maybe you're interested in joining the network. So essentially how PCAF as an initiative is structured, we drive implementation through regional and national collaborations. So as the financial institutions, when they commit to PCAF, depending on where they are headquartered, they will join one of the 5 regional groups. We do establish national coalitions or national chapters when there's a significant demand or when there's a critical mass in a particular geography. If we go on to the next slide, just very briefly in terms of, I keep saying the signatories and commitments. So what does it mean? Essentially, PCAF signatories commit to assess and disclose the greenhouse gas emissions of its financial portfolio. The commitment, in short, is the financial institution commits to measure and disclose a part of their portfolio greenhouse gas emissions within 3 years of signing the commitment letter. So that means the portfolio coverage is up to the institution. And there's the orange button that takes you directly to a copy of the commitment letter. So conscious of time, I believe that we have come to the end of the PCAF presentation. So on the final slide, we have included a link to the PCAF website and our mailbox in case you want to reach out and get in touch. I'd like now to hand over to Jonathan and Jenny to moderate the Q&A session and tell us. Yeah.
Brilliant, Tanga and Dylan, thank you ever so much for a hugely informative, packed session there. I've been scribbling away and taking notes furiously as you were talking. And we've also got some good questions that have come in on the Q&A. Let me start with one, I think, for you, Tanga, which goes to sort of what you were talking about there, really, and the sort of PCAF and its alignment to other important climate and broader reporting initiatives. The question is the correlation between PCAF and the new ISSB framework. Perhaps you could just comment on that, please.
Yeah, happy to. It's a great question. So it's very important to make sure efforts are aligned. So I think the ISSB disclosure rules, they explicitly include finance emissions, and they have included PCAF as an example. I think to be more specific, I believe the financial sector volume is B15 to B18, and Appendix B, where they have an industry-based disclosure, and that will go into more details in terms of metrics, finance emissions.
Brilliant. So get signed up to PCAF and you'll be on your way to getting ahead of the game on ISSB disclosures. So thank you for a very clear answer there. The next question from our very good friend, Veronique, very good friend of the Green Finance Association. Probably one for you, Dylan. Veronique is getting into the details, as always, of the accounting methodology, and her question is about supply chain finance. And I think she's perhaps referring here to, where banks are supporting suppliers in the supply chain finance by perhaps purchasing their receivables from buyers. How do we account for those? Is that like making a loan to the buyer? And perhaps some supplementary questions. Often these may be short tenor in period. If it's only, say, a 3-month facility, is that something you'd expect to be accounted for? Does it matter if it's present over the year end? What's your guidance on that, Dylan?
Yeah, that's a very, very good question from Veronique, Jonathan. Thanks for asking. So when it comes to the suppliers, if I'm understanding this correctly, so we're touching upon a topic when it comes to the suppliers. If I understand it correctly, then we're also talking about the suppliers of the suppliers of the suppliers. That means we're not talking about scope 3 category 15. And that's something that I wanted to make clear now. We're more talking about applying scope 3 calculations for the corporate itself. And the suppliers of the financial institutions or of the other companies do need to be taken into account when it comes to greenhouse gas accounting. So the suppliers of the suppliers of the suppliers of the suppliers need to be taken into account there, definitely, which means that we, applying scope 3 category 15, would need to do so as well. If that answers that specific question, when it comes, sorry?
No, go ahead. And I was wanting to make this more interactive, and I was thinking of maybe it's also worth to point everyone on the call to a particular decision tree that we included in the PCAF standard. I think that will also help to answer some of these questions in terms of which asset class of a particular financial institution may sit under which asset class methodology. I didn't mean to interrupt. I just thought about that as well.
Of course. Yeah. When it comes to if it, for instance, does not fall under the actual accounting period, because as Tiang said, and as I said as well, like it's very important to align the finance emissions calculations of part A to the actual balance sheet, which generally speaking would be done yearly. For instance, the examples that we've just taken a look at were from the 31st of December, year end. So it can be a different fiscal year end, of course. But basically, to put it very straight, is that when it comes to finance emissions calculations, if something happens within that year, so for instance, something is being bought, something is being sold within the period of time, it can actually be that this cannot be seen on a financed emissions report. That's very well possible. However, the PCAF standard does prescribe, and this is something that's written in chapter 6 as well, if there are very material things happening within that year that are not to be seen on the standard, can also be very important divestment, for instance, as well, please do disclose that transparently. Write it down. Like it doesn't have to be in the table where you summarize all the financed emissions. Write it down. There can be a qualitative explanation that's saying, all right, there are very important things that we did see happening throughout the year that cannot be seen here on the balance sheet. That's for one from very, very specific things. And then in addition, it might also be that facilitated emissions. So things that are going to be happening and focusing on things that are happening within the year, very specific capital transactions, that this might be expanded upon as well to include more of that at a later stage in time.
That's great, Dylan. So just as an example of that, to clarify, so on the reporting, you might disclose, for example, I'm not going to disclose financed emissions in respect of facilities with a tenor less than X months because they may not be there at the next balance sheet period. Just to be clear about what you are disclosing. I think that's your message there to that part of the question, right? Yeah, to a certain extent, indeed, because to fully exclude it, preferably not. So definitely still try to include it, but indeed just write down like there can be variances and there can be things happening within the year that we are not able to capture with this disclosure due to the high frequency of the loan or investment we're talking about. Right. And I think the other detail in Veronique's question, which maybe is something we should follow up separately, is more in the supply chain finance scenario. Are you financing the decision almost is, are you financing the supplier or are you financing the buyer? Therefore, whose emissions are you taking your attribution of? But perhaps I can leave that as a separate question, because I think that's getting very, very technical here. And I had a few others around this area, I think of more general import. We're obviously looking at the counterparty's emissions, let's say the borrower's emissions when we make a loan, but which of the borrower's emissions? Is it always scope 1, 2, or 3, or in certain cases may you just take the emissions, the scope 1 and 2 emissions? What's the guidance on that, Dylan?
So that's a very, very good question as well. This is actually captured in the PCAF Standard too. So generally speaking, what we're talking about here now is scope 1 and 2. So the scope 3 category 15 would cover scope 1 and 2 of the companies or individuals you loaned or invested in /2. However, there is a phased-in approach when it comes to including scope 3 as well. The PCAF Standard includes an overview where we phase in different sectors and making scope 3 relevant as well. For instance, mining and quarrying, oil and gas. These things are very important to include already, actually. But until 2025, we are asking financial institutions to include more and more sectors when it comes to scope 3, so that after 2025, we include scope 3 completely as well.
Okay, so you really must include scope 3 where it's material, where it's less material, include it if you can, but in all cases, disclose the methodologies you're using so that your reporting is at best value. Is that a fair summary?
It indeed is. And please do disclose scope 3 separately as well. So you're free as a financial institution, and please do to combine the scope 1 and 2 values, but keep scope 3 separately. For instance, if we're talking about automotive, and you have loans to the automotive industry or production of automotive, scope 3 is going to be immensely huge. And if that's the case, very good to show that what you're responsible for is financial institution, but there's a large difference there between scope 1 and 2, what you can do as a firm, or what people are doing with your cars when they're actually combusting the fuels that the car is using. So please separate those.
Oh, okay. So are you saying that if I, as a bank, a lender, are disclosing my financed emissions in respect of my loans to the auto sector, I should differentiate between scope 1 and 2 financed emissions and scope 3 financed emissions, if possible?
Yeah, definitely. Please do. Otherwise, it makes the view that you have a bit obscure and a bit vague, because otherwise it's very difficult to differentiate between what the firm can actually do, because it's easier to focus on scope 1 and 2 of the firm itself rather than further down the value chain. Okay,
excellent. Wow, this is getting complicated. I can hear the accountants getting excited by this, all of this extra reporting and auditing needed. Another question for me that I picked up just because you touched upon it. When do you recommend that you report sort of absolute emissions from your clients, and when do you recommend that you might import an emissions intensity, financed emissions intensity factor? What are your suggestions on that?
That's a very good question. So the PCAF standard is largely in favor of absolute emissions, generally speaking. This is written in the standard as well. As a matter of fact, we proud ourselves with focusing on absolute emissions to a certain extent there as well. However, what we do see, if you translate that to actual practice, is that a lot of financial institutions don't do that though. Like there are a lot of sensitivities involved when it comes to reporting absolute emissions, that you still see that a lot of financial institutions do only report economic emission intensity, do only report physical intensities, rather than absolute emissions. However, our recommendation would still be to actually disclose as much as you can. If you can disclose absolute emissions, if you can disclose economic activity, if you can disclose physical activity, please do so, because it's actually the combination of those things that provides the best image and also allows for the best comparability between financial institutions, because otherwise that's going to be relatively challenging if in and of itself, because economic intensities do not say that much about what you are actually responsible for as a financial institution in terms of sheer size of the absolute emissions.
Okay, great. We've got a couple of questions just come in on the Q&A. I'll try and get in before we get to the time. Is how do you source the emissions factors that you have in your database? What's the source for that? And are there occasions when there's a rationale for making adjustments to those because you perhaps think there's an adjustment that's applicable for your particular borrowing client in a particular case?
So PCAF Emission Factor Database is open source, so all sources are transparently documented. Just to name a few, for example, the economic activity-based emission factors come from Excel-based, EXIO, BASE, and only economic activity-based or physical activity-based emission factors are included in the PCAF database, and these are also geography or sectoral averages. So we don't have corporate level emissions. And in terms of adjustment, we do have a database team, which means once we have received the emission factor from the sources, we do apply adjustment methodology to it where suitable. And that is also transparently documented in the PCAF database. Typically, we don't, I haven't seen many, at least from my experience, FIs don't just edit the emission factor for one particular company, like one particular investee or borrower, because they are more energy efficient than some others. But it depends on case by case, and when it comes to apply emission factors to do the estimation, we encourage transparently document if you have done some additional adjustment to it.
Okay, brilliant. So the source is listed in the database itself. So I encourage everybody to look at that and forward any questions. Now, there are some more questions, but we have just gone over the hour. So some very interesting questions like how do we account for short positions, and how does PCAF support the development of voluntary carbon markets? I'm going to suggest that to those who've asked those, perhaps they can, we will provide the materials to obviously all participants, so you'll have the contact details of the PCAF team. Perhaps ask those direct, because I don't think, Jenny, we've got more time to take any further questions. So Jenny, perhaps I'll wrap up as I've got the microphone here with a huge thank you to the PCAF team, Tianga and Dylan, for their sort of excellent sharing today. A huge thank you to everybody who has joined. I hope you found this as helpful as I have, taking notes on everything that the PCAF team have shared. I think it's very clear, the message from Tianga and Dylan, for all of us who are serious about playing our part in dealing with the climate change of which climate challenge of which greenhouse gas emissions are clearly core. If you want to manage it, you need to measure it. So do get yourselves signed up to PCAF, take the plunge, get your organization to make that commitment, get yourselves on the pathway to reporting. And of course, just a final message to everyone. If you enjoy trainings like this, if you like getting involved in the debate around climate, and bringing capital to support the transition, you want to build your network of like-minded people, and you want to get access to leaders in driving the transition, then there's no better way to do that than, if you're not already, get yourself signed up and join the Hong Kong Green Finance Association. So with that, thank you very much to everybody, and we'll close the webinar here. Thank you.
Thank you very much.
Thank you.